Hi and Assalamualaikum. My name is Siti AZLAN. I'm going to talk about the company background of Consolidated Berhad. It's a public listed company in the main market of Pusat Malaysia, which is a diversified group with 6 core businesses. It was founded in 1976 and is based in Kuala Lumpur, Malaysia. For the main activity, it has real estate, the management of company and enterprise, and all palm tree farming. For the secondary activity is clay product and refractory manufacturing, and motor vehicle part and supply merchant wholesaler, and chemical and allied product merchant wholesaler. In this current year 2022, it has total of 8,890 employees. The majority of the Hubsan revenue is generated in Malaysia, with smaller operation in other Asian countries. Now, I go to the factor to consider having a segment reporting. The first one is nature of the business activity, which defined as any activity that is being carried out by an entity with the main objective of gaining profit maximization. The nature of the business activity of Consolidated Berhad is an investment holding company, which engage in business of plantation, property investment, development, trading of fertilizers, automotive, building material, and stone quarry. The second factor is assistant of manager responsible for the activity. Each of the operating segment generally has a segment manager who directly accountable to and maintain a regular contact with the CODM. The segment manager may not necessarily a manager with a specific title, but is a function. This role is important to ensure the operating activity, financial result, forecast, and plan for the segment can be discussed. The last one is the information presented to the board of directors. Operating segment can be determined based on the report reviewed by the board of directors and senior management. This information includes sales, revenue, expenses for each activity to make a better judgment of the company performance. Now we'll move on the type of segment, which is the first one is business segment. The first one is plantation, which involved in cultivation of all palm and processing of fresh fruit bunches. Second one is automotive, engaged in trading motor vehicle, spare part, and servicing of motor vehicle. The third one is credit financing, which involved in provision of financial services. And the fourth one is property, which involved in property of development and property of investment. The fifth one is trading, that engage in trading and distribution of fertilizer and agrochemical, trading of general building material, petroleum product, manufacturers, and trading of style. The last one is building material, which is involved in operation of stone quarry and alpha plant and manufacture of brick. The second segment is a geographical segment, which is a unit of entity that engage in providing product or services within a particular economic environment. Consolidated Berhad provide its services and product and conduct its operation locally and globally. As we can see in the above picture, for the property division, it operates in Kuala Lumpur and Sabah. For credit financing division, it operates in Manchester, United Kingdom, Kuala Lumpur, Malacca, and Sabah. For the plantation division, it operates broadly in Sabah. For the building material division, it operates in Kuala Lumpur, Sabah, Singapore, and Johor. For the automotive division, it operates in Kuala Lumpur, Perak, Johor, Penang, Pahang, Malacca, Sabah, and Sarawak. For the trading division, it operates in Kuala Lumpur, Selangor, Johor, Penang, Singapore, Indonesia, and China. Now, I will introduce the chief of decision maker of this company, which is board of directors that consists 10 people, which is Chia Yilang, Lee Wing Yong, Dato' Edward Lee Min Fu, Thomas Kal, Dato' Wan Muhammad Pasmi, Dato' Abdul Aziz, Liao Ming Fong, Tan Bung Peng, Wong Yoki Chen, and Dato' Simon Shim Kong Yip. Then I will explain about the responsibility of the CODM. CODM is responsible to allocate resources and assess the performance of the operating segment. It also responsible in strategic decision making regarding the entity. The board is responsible for overseeing the management of the business and affairs of the group, including the commitment to sustainability and the best interest of the company. It is also responsible to disclose information to enable users of the financial statement to evaluate the nature and the financial effect of the business activity. This is information taken from the board charter of Hudson Consolidated Berhad. It states that the responsibility of the managing director is responsible for efficient and effective management and operation of the group, in accordance with strategic direction of the board. Executive director hold the highest level management of responsibility and operational decision-making authority within the company. Non-executive director help to mitigate any possible conflict of interest between the policy-making process and day-to-day management of the company. Independent director, in order to foster greater objectivity in its boardroom deliberation and decision-making.
Assalamualaikum and hi, my name is ATHIRAH binti ZULKURNAIN. In this video, I will show you guys about segmental report. The first thing is reportable and non-reportable segments. If a company's product or service is substantial and form a part of a recognizable business, the product or service is reported as a separate operating segment internally. For example, based on the quarterly report ended 31st December 2021, plantation, property, credit financing, automotive, trading and building materials are among the key items or services offered by Seng Consolidated Berhad. Normally, these are stated as separate operating segments. If an operating segment is determined using the criteria outlined above and it exceeds the quantitative threshold, the entity must report information about that reporting segment separately. Next is threshold for reportable segments. An entity should report information about an operating segment that meets any of the quantitative thresholds separately, which are: the first one is reported revenue is 10% or more of the combined revenue of internal and external of all operating segments. Second, profit and loss is 10% or more of total profit and loss of segments, whichever is greater in absolute amount. And the third is assets are 10% or more of the combined asset of all operating segments. Other non-reportable business activities and operating segment will be grouped and disclosed in an all other segment category. The question required to apply any 10% threshold test, including 75% threshold test. When applying the 10% threshold test of reported revenue using the formula, it is shown that plantation, property, automotive and trading are the reportable segment because the total revenue of each segment is more than 10% of the combined revenue of all segments, while credit financing and building material are non-reportable segments. Next is 75% threshold test, which the formula is total external revenue of reportable segment divided by total external revenue of all segments. After calculating using the formula, it is shown that total external revenue of reportable segment is 89.79%, which is more than 75% of total revenue of all segments. Thus, the management of Seng Berhad does not need to identify additional reportable segment. For the new segment of reported revenue, plantation, property, automotive and trading are categorized under reportable segment. Meanwhile, credit financing and building materials are under non-reportable segment. When a company reports its financial activity by sector rather than as a whole, it is known as segment reporting. This kind of financial disclosure has some advantages, but it also has some drawbacks. There are some advantages of segment reporting, which include segment disclosure and investment decision-making, segment disclosure and other users, separating profitable segments. For the disadvantages, there are allocation of common costs, data manipulation, and difficulty in providing data. The first advantage of segment reporting is segment disclosure and investment decision-making. Investors will be able to access the earnings potential and risk of a business as a whole if they are given information on the profitability, risk, and growth of different segments of its operations. They will be able to forecast a company's future earning and cash flow more precisely than consolidated data alone. As a result, investor uncertainty about the company's prospect will be decreased, share price will be set more precisely, and resource allocation will be more efficient. The next one is segment disclosure and other users. Aside from investors, segmental reports have been recommended as being valuable to employees and trade unions, to customers, the general public, government, and for the aim of enhancing managerial efficiency. Employees and labor unions are interested in the company's performance and prospect for pay negotiations and job security. Thus, segmental reports may just be as useful to them as they are to investors. Information on segmental performance is also required so that management policy decisions to expand or reduce specific activities can be validated and understood. On the other hand, a lack of information can lead to mistrust and labor relation issues. The third one is separating profitable segments. Transparency is a major benefit of segment reporting. Segment reporting can disclose which sectors are profitable and which are drains on the bottom line for organizations that operate in several categories or geographic areas. For instance, if segment reporting reveals that a company's international operations are more profitable than its home operation, it may induce a strategic shift. It prevents management from cancelling unprofitable ventures when done correctly. Next, the first disadvantage of reporting segment is allocation of common costs. They are likely to be costs that are shared by two or more items in a company that produces many goods or engages in multiple activities. These costs are shared by multiple segments and cannot be attributed to a single section in its entirety. Some products have a more difficult time assigning common expenses than others. It is especially useful for assets, liabilities, and equity. Therefore, reporting for company segments is recommended less frequently for data from the balance sheet, statement of shareholders' equity, and fund statement than for data from the income statement. Cross-company comparison of similar segments are likely to be deceptive due to the variety of techniques used and the reliability of segment operating results vary depending on how closely the basis of allocation approximates outcome created by the market transactions. The second one is data manipulation. If information is reported through management's eyes, segment reporting lends itself to data manipulation. This offers company executives more discretion in deciding how segments are built and what indicators are provided. Managers may combine organizations with various business concepts together. It can also pick and choose data to send the right message to stakeholders. The last one is difficulty in providing data. Measurement issues have made it tough to provide while performing segment reporting. The difficulty of determining segment information should be considered since the measurement problem affects the possibility of disclosing specific information. When looking at the profit and loss account statement, the business quickly runs into difficulty with sales figure, particularly the inter-segment sales.
My name is SYAFIQA binti AHMAD DAMAHURI. Now, moving on part B, Interim Report FAR570. The first question is about basis of preparation used by the company in preparing their interim report. There are two bases of preparation, which is integral method and discrete method. First, the integral method. The integral method takes the view that the interim report is a part of the parcel and large annual financial reporting cycle. For example, fraction of the annual period. While the discrete method takes the view that each interim period should be treated as an accounting period distinct from the annual cycle. Seng Consolidated and Berhad adopt the discrete method as their basis of preparation since it published quarterly interim financial reporting. The interim financial statement have been prepared in accordance with the requirement of FAR570. Moreover, the company also based on paragraph 9.22 of the Bursa Malaysian Securities Berhad listing requirement. They should be read in conjunction with the group audited financial statement for the year end 2020 and the accompanying explanatory note attached to the interim financial statement. Now, I will tell you the accounting policy used by Seng Consolidated and Berhad to prepare their interim report. One of the accounting policy used by the company is FAR570. Biological assets comprise produce growing on berry plants. Biological assets are measured at fair value less cost to sell. Any gains or losses arising from the changes in fair value less cost to sell are recognized net in profit or loss. Fair value is determined based on the present value of expected net cash flow from the biological asset. The expected net cash flow are estimated using the expected output method and the expected market price of the biological assets. Biological assets are classified as current assets for produce growing on berry plants that are expected to be harvested on date not more than 12 months after the reporting. Next is MFRS 116 Property, Plant and Equipment. Freehold land is not depreciated. Depreciation commences when berry plants mature and when the assets under construction are ready for their intended use. Depreciation of other property, plant and equipment is provided for on straight line basis to write off the cost of each asset to its residual value over the estimated useful life, except for the quarry infrastructure which is depreciated based on the production value method. Next question is type of interim report used by the company. Seng chose to apply condensed set of financial statement in preparing their interim financial report rather than complete set of financial statement. In the report, according MFRS 134 prescribed that set of condensed financial statement consists of minimum content for the current period and comparative prior period information such as condensed statement of financial position, condensed statement of profit or loss and other comprehensive income, condensed statement of cash flow, condensed statement of changes in equity, and selectively explanatory notes.
Assalamualaikum. My name is Muhammad Aiman bin Ahmad Badri and I'm going to talk about the types of interim report. Interim report are reported in 4 different accounting periods. First is quarterly, which required the company to report financial statement 4 times a year. Second, bi-monthly, that required company to report 6 times a year. Third is semi-annually, which required company to report twice a year. And lastly, yearly, which required company to report financial statement every year. As we can see, it is the period for the current year and it's comparative for the company Seng Consolidated Berhad. They report its interim report quarterly and yearly for statement of profit or loss and statement of comprehensive income, while for the rest of the financial statement, which are statement of financial position, statement of changes in equity, and statement of cash flow, are reported yearly as stated in the table above. Now, moving on to adjustment and extract of financial statement. There are 2 adjustments. First is adjustment in the adjustment on land held for property development. According to accounting standard MFRS 123, specific borrowing cost is when an entity borrows fund specifically for the purpose of obtaining a qualifying asset or borrowing costs that are readily identified. Borrowing costs that can be capitalized is the cost incurred during the period less any investment income on temporary investment of those borrowings. In this case, Seng Berhad borrowed a fund of 1 million ringgit and incurs interest of 100,000 ringgit during the construction period. During the year, they earns 10,000 ringgit of income by investing these funds prior to spending them on qualifying asset. So the borrowing cost that can be capitalized is 90,000 ringgit as the income of 10,000 ringgit offset with the interest incurred during the period. Before adjustment, land held for property development amounted to 1,398,923,000 ringgit under non-current asset reported under statement of financial position. After adjustment, the land held for property development increases to 1,399,013,000 ringgit due to the capitalization of the borrowing cost to the asset. Now, for the second adjustment is for property, plant and equipment. On 1 January 2015, Seng Consolidated Berhad purchased a property at the cost of RM200,000. The property is classified as PPE under MFRS 116 and being depreciated over 10 years. On 31st December 2021, the property is reclassified as investment property under MFRS 140. The fair value of the property at the date of change is RM220,000. So, here is an extract of statement of financial position before adjustment. The property, plant and equipment is amounted to RM4,054,027,000, while for investment properties is RM2,171,844,000. After the adjustment, the property, plant and equipment decreases to RM4,053,967,000, while for investment properties increases to RM2,172,024,000. This happened due to transfer of PPE to investment property. That's all from us. Thank you for lending your ear from the start to the end of the video. Thank you.